Hello everyone. Today I will reveal one of the most profitable trading setups which is only known by top-notch traders in the financial industry until today. Following this rule set will give you an 88% probability for any entry model you wish to use. You will not find this trading framework in any book, not on any website, and nobody ever taught this model to any trader outside the walls of the elite trading firms. After working for over 18 years in the industry, I want to give something back. And my goal is to help people to create a better life by utilizing the almost unlimited opportunities which trading offers. If you implement what I will teach you today, I can guarantee that your trading will become much more successful. It will help you to understand where the price is going next. You will have better entries and exits, and your win rate will increase a lot. The most important part is that the probability of your trades will increase dramatically. Before we start, this trading setup is only for the New York equity trading session from 9:30 a.m. until 4 p.m. The markets in which you can use it are the S&P 500, the Dow Jones and the Nasdaq. I think it should also work for Russell, but I can't guarantee it. All the probability numbers I will give to you are based on the fact that the model is not used on days with high impact news drivers like CPI, FOMC, NFP and so on. The model can still work, but the probability on these days is way lower. I am not going to explain in this video why this works. Let's simply refer to ICT teachings that an algo is controlling price actions. If that's the case, this model is a crucial part of how the algo was programmed. So let's get started. First, we need to mark what is called the defining range, or short DR. This defining range is from 9:30 a.m. until 10:30 New York local time. Let us draw a box around that 12 candles in the 5-minute chart. Now I am going to mark the high and the low of this range, including the wicks. And here it is getting interesting with the first part of the rule. At 10:30 New York time, we already know with 88% probability the high of the day or the low of the day. I say it again. 10:30 in the morning, we already know with 88% probability the high of the day or the low of the day. I hope you can understand the gravity of what I just told you. New York session is in total 6.5 hours. And after 1 hour, you already know 2 of the most important reference points for this day. So at this point, we don't know which one will be the real high or low of the day. Only one will be true. And now the magic comes in with the second part of the rule. If price is closing, at least in a 5-minute time frame, above the DR, it is confirmed with 88% probability that the low of the DR is the low of the day, and vice versa. If price is closing below the DR, it is confirmed with 88% probability that the high of the DR is the high of the day. If that wouldn't be enough already, I will show you the implied defining range, or short IDR. For that, we draw another box and mark the highest body and the lowest body in the DR. And voila, we have our IDR. So the implied defining range gives you an early indication about what the high or low of the day will be. If price is closing above the IDR, you will have an early indication that the low of the DR is the low of the day. Note, when I'm talking about closing, I mean really closing above, not just wicks. And vice versa. If price is closing below the IDR, you will have an early indication that the high of the DR is the high of the day. By now, you hopefully grasp the magnitude of what I just handed over to you. I gave you the key to higher profits, more accurate buyers, and entries and exits with a huge edge. I also showed you a stop level that will be not reached with 88% probability. It is important to understand that this rule will give you a higher probability for any entry model you prefer to trade. It doesn't matter if you use ICT concepts, smart money concepts, volume profile, Elliott waves, or whatever. Also, this rule itself can be used as an entry model. There are so many possibilities for trading within this rule that I can't name and show them all. In the second part of this video, I will show you 3 recent days of price action and how I utilized this rule live within my trading session using ICT entry models. Example number 1 from this Monday's trading session. I am marking the DR and the IDR. Price goes higher and closes 2 times above the IDR. That means I have an early indication of the fact that the low of the day will be the DR low. As you can see, we had a fair value gap on the last leg down inside the DR. As there is no confirmation or early indication, I will not take this trade. With the early indication, I want to see a long setup forming. So let's mark sell side liquidity and other points of interest. Price goes down and takes sell side liquidity. Note how it is not closing below the IDR. Let's say your bias was long overall. You got the early confirmation for the low of the day, then you could have entered directly after not closing below the IDR. If you would like to increase your probability even more, you wait for a structure break and a fair value gap, which the market offers you right there. As the market goes higher, it offers a second nice fair value gap entry model, which could have been used if you missed the first entry or to add additional contracts to your position. I hope I don't have to mention it, but there was another short fair value gap on the last leg down. Guess what? I wouldn't take it. Because why? Question mark. Correct. Close above the IDR and a failure to close below the IDR. Price drives higher, confirms the low of the day, takes out the buy side liquidity and closes the volume imbalance above before it closes the session. That concludes the first example. Example number 2. Wednesday trading session. Why not Tuesday? Because midterms elections count as high impact event driver. Shortly after 10:30, the market generates an early indication followed by a close below the DR at 10:55. This confirms the high of the day, so I am looking for a short entry. 2 fair value gap already formed, so I used the Fibonacci retracement to see which one of them is above the 50% value of the IDR. Price retraces into the upper fair value gap and I enter short. You could have used both fair value gaps to enter into a short. I personally expected a higher retrace because we took out the sell side liquidity to the left, which was Tuesday's low. Price reaches lower and gives multiple chances with fair value gaps to participate in the down move. That concludes example number 2. Last but not least, example number 3, Friday session. Why not Thursday? Because Thursday was CPI and by that high impact event driver. After 10:30, price reaches higher and closes above the IDR, which gives an early indication for the low of the day. It retraces more but fails to close below the IDR. So if your bias would be bullish, you could take a long trade directly there. If not, you wait for a structure break and a fair value gap. which the market presents to you. I know there is a short fair value gap to the left, but I don't answer this anymore. After offering a beautiful entry within the fair value gap, market goes straight up and confirms the low of the day, and continues to go up for the rest of the session. That concludes example number 3. I did not cherry pick those examples. I simply just took the last 3 trading days without high impact news. But the rule was working the week before and the week before that. To be precise, it is working for me for over a century now. If you like, you can also check my Monday and Wednesday trade recap video, where you can see how I traded the shown trades live. There is only one last thing for me to say. Don't believe my words, go into your charts and backtest what you have learned today. If you want to do it perfect, check the high driver news days and leave them out. Let me know in the comments what was the outcome. I really hope this will help you to become a better trader. Leave a like and subscribe, and share this video with everyone you know who is trading to also help them. Talk to you soon.